Okay, we have an article here. Very good job explaining what's going on with chocolate prices from a very reliable source. Let's go right now to the article. So it says Swiss chocolatier warns high cocoa prices resulting in global slowdown in chocolate market. So chocolate maker Lindt Spruengli AG has warned the global chocolate market is under strain due to high prices. Reducing demand is necessary to prevent cocoa prices from surging once again amidst persistent cocoa supply issues stemming from adverse weather conditions impacting some of the world's largest farms in West Africa. So Bloomberg reports that Lindt CEO Adalbert Lechner told investors during an earnings call on Tuesday that the global chocolate market was experiencing a slowdown for some products due to rising cocoa prices. He said price hikes for consumers partially offset higher cocoa bean costs for the Swiss chocolatier and confectionery company, adding that cost inflation will ramp up into next year. Quote, it is quite difficult to predict where the future markets will go from here and how quickly we will see a further correction, Lechner told investors. He said, the speed and the extent of the market correction will also depend a lot on the impact of the overall volume demand in the chocolate market. So cocoa futures in New York have been oscillating what some call a symmetrical triangle since prices peaked at $12,000 a ton in April. This followed a massive run up early this year, fueled by a historic shortage in West Africa due to poor harvest. The $8,000 level per ton level is a price magnet as traders wait for new harvest or demand data. So, quote, it is still early in the season to predict harvest figures, which may keep the market in a back and forth pattern, according to a Tuesday 8 a.m. Investors Service notice. So, cocoa prices have been supported by better than expected demand and poor harvest figures. Some analysts believe prices might need to go higher to achieve proper demand destruction. So end of article. In summary, that last sentence says it all for those who are not quite familiar with supply and demand, is that some analysts believe prices might need to go higher to achieve proper demand destruction, meaning that buyers will begin to substitute chocolate buying and they will begin to simply avoid chocolate buying because the prices prohibit that type of discretionary spending. And it now is removed from their budget, removed from their list of items that they normally buy. But if prices were to fall back down, then it would be in the range, and you would achieve market stability where supply and demand have met again. Yeah, as we can see from the graph here, crazy prices in the first few quarters of the year, 2024, and then these last few months it's been up and down. But now there is some stabilization around 8,000. That's the new floor. But it affects retail buyers. It affects supply chains, and these companies have to lock in their prices for harvest many months in advance. And if the prices are so high, these companies are then obliged to pay those contracts, which is why they're now forced to push that higher price that they just paid for the cocoa onto the consumers in the supermarket or wholesale or whatever. Okay, just wanted to give that update, explain what's going on with these market forces. Hopefully that clarifies some things for those familiar with the chocolate trade. Okay, wishing everybody a good day.